got the new one in my
They ain't got no muscle, no hustle, no backbone.
Hey, this is MrNotAdvice, and I've got my special co-host back, Mr. Greg Reyes. How are you doing today, sir?
I'm doing good. How about yourself?
Doing great. I'm fighting this crud that I think everyone across the nation has been fighting, but yeah, I feel good. I got my face ripped off on a couple trades today, so that didn't feel good, but I did scalp the SPY successfully, so that mitigated some of that. Before we get started, of course, anyone listening to this is for entertainment purposes only. There's nothing in here that should be construed as a buy or sell recommendation or an offer for any service or advice. Never get your investment advice nor any advice off complete strangers off the internet. And always consult with your advisor, whoever that might be, before you do anything with your money ever. Having said that, welcome back, Mr. Greg. We have not talked in a while, and I am super excited to have you back. What shall we start with today? We've got a full platter of things we'd like to talk about. What would you like to start with, sir?
Well, I think it may make sense to jump into EOS because I think there's a lot to talk about there, and
All right,
then maybe we can spend a few minutes on ENVX and Pure Cycle, and then wrap up with Beyond.
sounds awesome. Thank you.
Sure.
So, well, EOSC, just from a technical standpoint, Bud, if they don't release news, we've been inside this battle zone. This current price goes all the way back to February 25th. And
Yeah.
if it's just sort of floating down now, but it's getting very close to a very important technical level, which is 366, which happens to be the high of 1016, which was the break that happened on 1216 that jammed this stock up. So it's getting near. I'm saying it's getting near. What's your view? Are we going to hit that level?
Obviously I don't have a crystal ball, and my time horizon is kind of a multi-year investment horizon, but I think that there's been pressure on the stock, obviously, because the market's had a ton of volatility. And I also think that there's, a fair amount of angst as it relates to the budget reconciliation and what happens to the production tax credit and the investment tax credit. And, I think maybe the right place to start is to just spend a couple minutes talking about the most recent earnings call.
Mm-hmm.
And I just want to hit some of the highlights.
Awesome.
The EOS earnings call I thought was really spectacular, and I think there were a number of very interesting nuggets in there. The first is the CEO started out and he was talking about the TAM, and one of the things that he mentioned that I thought was very interesting was the projection that energy demand, electricity demand in the United States is going to double by 2025, and that the compounded annual growth rate is around 25% year over year. So we have a big TAM, which is one of my important success filter boxes. The CEO talked about the fact that there is uncertainty as it relates to the production tax credit and the investment tax credit, and I don't think anybody knows exactly how this is going to play itself out. But needless to say, red states are significant beneficiaries of this element of the IRA. And if I had to guess, they may be modified. They may be modified to not allow Chinese companies to participate, or they may limit participation if there's Chinese content. But the CEO said that the company loves incentives, but they don't rely on them. And that at the end of the day, they're continuing to work with the loan office. They got funded. They were one of the only companies that have actually been funded since the Trump administration came into power. So obviously that's a wild card that once it gets resolved, and depending upon how it gets resolved, I think it could be quite positive and catalytic for the stock. It may also put a headwind on the stock depending upon how it sorts itself out. But I think the indisputable reality is that the demand for electricity continues to grow. It's compounding. And, whether it's a microgrid opportunity or a standalone battery drop-in, or it's solar or wind or data centers. At the end of the day, EOS is going to be really the only long duration storage company that has 90% plus American content and is produced in the United States. And I still think that there's a relatively, I shouldn't say relatively high, I think there's a high probability that at a minimum, the Department of Defense is going to ban Chinese batteries from being supplied to the Department of Defense. And I wouldn't be surprised to see an all-out ban of Chinese batteries attached to the grid, because we know for a fact that, or at least I know for a fact that the CIA is well aware that Chinese are sucking telemetry data off of the back door of long duration storage batteries that they've deployed, or even short duration. And, that door swings both ways. I mean, if they can suck data off of it, they can certainly hit it with a command that would cause a rapid discharge and could fry transformers. So I think there's that macro tailwind. They also talked about commercial growth, in that they're really seeing incredible demand across all sectors. They believe that they've got a unique advantage, which I think is very compelling. There's been a lot of talk about, lithium ion prices have gone down dramatically. Well, that talk has abated a bit, because now President Trump is layering another 25% tariff on top of the 7.5% tariff that was set to, or has been in effect. And they talk about having today a 30% levelized cost advantage. And the implications of that is that when you add all of the cost of ownership and you look at, the maximum life cycle of a lithium ion battery with one charge discharge cycle per day is approximately 10 years. Well, EOS has a 20-year life. And you've got lithium ion batteries that are limited because of their one charge discharge cycle a day, that with EOS being able to do multiple charge discharge cycles within a day allows the customer to capture and maximize their economics. So I think that everything is lining up from a financial standpoint to make EOS a compelling offering. And I think they're going to continue to get cost out of the product. And I would not be surprised to see them be equal to or less than in the future with their cost initiatives to be, on par to lithium ion pricing. So that's a massive, massive macro tailwind. The other thing that I thought was interesting on the call is that they're seeing larger deals. They're seeing an increase in demand as it relates to long duration deployments, which are batteries that can provide more than 4 hours of storage. They said the only deals that they've lost were 4 hours or less, which to me implies that they've got a greenfield market opportunity in front of them, at least for the foreseeable future or for the next couple of years. So I just look at the stock and the company in its totality, and I see a company that has a massive TAM. They've got the atmospherics lining up behind them in terms of what's happening politically and with tariffs and with U.S. content. They've got the lowest cost when modeled effectively to have all of the right inputs. They're getting 98% yields off of the line as it exists today. They've dropped in an automated subassembly element, which is critical to them being able to scale up. That's being put in place and going through site acceptance testing in Q2. They're sourcing 3 additional lines to be in position to meet demand. They're bidding for a second location. They're doing it all. And when you sum up the product, they're the cost leader. They are contribution margin positive today. They've got a product that has a unique set of characteristics. They've got their pipeline up to 14.4 billion in terms of opportunity. They've had dramatic growth in terms of engagements, and they've booked additional orders. One in particular was with the Navy that I think could be a proxy for the rest of the Department of Defense. So it's all kind of lining up, Mr. Not Advice. And the one thing that's missing is we need to see some of these orders start to hit the tape. And I think once that happens, we're going to see the stock dramatically re-rate. That's just my opinion. It's not a prediction.
What do you think about? I saw a question on Twitter. Actually, he was kind enough to reach out to me privately, Mr. Charles Land. He got grief for it. By the way, people on Twitter, I mean, grow up already. I mean, if somebody asks a question and he had asked another question, I mean, it's just a question. I mean, if you don't agree with it, you can state that. But okay, back to the question, which he asked me, and I said, I don't know. I haven't looked at that because I'm not a macro person, but I mean, not as deep, nowhere near as deep as you. Where's the financing for all these lines going to come from? And my understanding was that they still had access to a draw as well. Well, they still have DOE funding coming, and then I believe they also have another benchmark payment. No, so
Well,
that was my question. And his question led to, gee, is there a concern of dilution?
Well, it's so funny because I saw some of the chatter on that, and there's some guy that just will not let it go.
Yeah.
Here's the reality of the situation. They've got 100 million in cash right now.
Mhm.
They've got access to in excess of 240 million, I believe, on the DOE loan for 80% of expense reimbursement. And they've got $200 million in Cerberus funding available to them. And as they get additional orders, they get
Mhm.
20% deposit. So if you've got a line that can do 250 million a year with gross margins north of 50%, that line pays for itself. And if customer deposits are applied towards CapEx, I don't even know where that concern comes from. It seems like it was fabricated out of whole cloth. I just don't see it. I
Okay.
just don't see the need for it.
Yeah, and I had that, and I'm glad I got a chance to ask you that question because I was like, huh, that's an interesting question. And once again, I tend to answer almost all the questions on Twitter. I know you do too. I will say this: if I own Leaps, okay, I'm going to get hosed on my April calls. So be it. There is nothing out of this company. I agree 100% with what Greg says. 100%. And from a trader standpoint, I will tell you this. Why are people worried? You can point to why this is happening. The overall market has been a mess. Okay. On top of that, if you believe that story, then what you want is before we get clarification on the tax credit, before a customer is announced, because if you believe in it, you believe those things will happen, you want this thing to go down. So I will tell you that I want it to test the 366 level, which it's done once. Okay. It, once it does that, I want it to break. I want this thing because if we break 366, the 200-day moving average, thanks to my member at CW who convinced me after 18 months I should look at moving averages, is at $3. That's great. So if you believe in the company, it's painful to see the stock down, but I look, I've been in this between Greg and I, we probably about 4 million years in this. So I'm not worried. And I'm not a guy who falls in love with a company either. But I'm telling you that the plate is set for this company. It's just set for it. They've got to execute now. But if they show just a glimmer of that, it will separate itself from the market. It could be one of those stocks that people just flock to because you know what? It keeps going up. That's what the plate is set for that for EOSE. Any final comments on EOSE, sir?
Um, yeah, well, so along those lines, I just saw somebody that's involved on Twitter and knowledgeable in the stock just tweeted that, and this guy's got pretty good insights into various projects and project status, but he just mentioned that in Puerto Rico, they approved two 10-hour long duration storage projects that have a value of $380 million. So there's only one company that can deliver that, and it
I was
happens
just
to
going to
be
say,
EOS.
who's their competition?
Yeah, they don't have any. And we know that the Puerto Rican team went to Turtle Creek and visited the company and viewed the line, right? So I would not be surprised to see an order like that hit between now and earnings or soon after earnings. I also think that we're going to see good news as it relates to the ramp beginning in earnest in Q2. But if you think about this product, it's got multiple infinite cycling options, which lithium ion does not. It's got the lowest cost of ownership by 30%. They've got a 20-year life. And really, the market is moving in their direction atmospherically. I think it is becoming well understood that, the store of value as it relates to energy is the battery. Being able to drop batteries in at varying sites to maximize the economics for the utility provider, the energy provider, the microgrid provider is epic, because you don't have to do eminent domain and claim land to do high tension wires. You just drop in a battery to maximize this. And and again, I'm very long. I got a lot of this stock, both common and notionally, but I'm, playing for, 2026, 2027. If I
Mhm.
just go back to my experience at Brocade, when the company went from 75 million to 365 million in revenue, the market cap went from, 2 billion to 24 billion. And I'm not saying that's going to happen with EOS, but what I am saying is that once the tariff confusion and the tariff tantrum settles down, and once there's clarity about how the production tax credit and the investment tax credit are going to sort out, and we see EOS get orders, and we see them put capacity in place to do $2 billion in revenue. The only thing missing is orders. And I think once we see those orders hit, I think the stock could re-rate, and it could re-rate massively, and it could happen very, very quickly. So I do agree with you. I think that, because the stock has uh, had a headwind because of the tax credit uncertainty and the tariff related volatility, these are really buying opportunities for people that believe in their thesis and they have conviction about their thesis. And I happen to be one of them. And, I continue to add along the way, and will continue to do so, because I'm playing for a $30, $40 stock.
Well, and let me comment on that. My $15 price target at the end of the year stands. If they execute and do what I think they're going to do, that 15, I don't think will be an issue. Okay. I do not think, I mean, I want it to go lower, but it's amazing. Listeners, I want you all to remember this. Mr. Rees and I discussed EOSE back in November. Okay, we did it in June, by the way, after Cerebus, but then we discussed it again in November at the bottom. And then I made the comment in the conversation with Mr. Rees that they needed to have at least 2 news announcements to get back above the 366. They did it, and then it got gunned. I'm not saying that Mr. Rees and I are always right. What I'm saying is there's probably a higher probability of listening to what we say, testing it against your thesis, than there is from some jabroni. And final comment was, what I watch for is when EOSE started making a run, I started to see a bunch of Twitter gurus that had 100,000, 200,000 calling it as their find of the year. Now they've been deathly silent since this, okay? Because I watch. When this stock, if and when this stock starts moving back up strongly, don't forget they're still there. They're going to be helping pumping the stock. So there is that too from just a social media standpoint, but it's not going to need it. I mean, literally, what Greg just said, what you said, they literally had the Puerto Rican, they visited Turtle Creek, and now the Puerto Rican government needs it. I mean, sometimes 2 plus 2 equals 4. We don't know yet, but I mean, my gosh, it wouldn't surprise us, you know? So, having said that, why don't we move on to our bastard stepchild? Um, I'm just kidding. It's not any relation to us whatsoever. NVX. I don't know how you would like to do this because, um, by the way, final EOSE, I think we're going to head down to 366. I'm amazed it's holding 4, but I think 366. But it's really right now being algorithmically driven as I see it, primarily by it's a drift and SPY's taking it down. So NVX. I've got a couple of member questions that I could ask you to start, or would you like us to give us? I would like to hear your collective view since we haven't talked in a while.
Sure, and then we can get to the questions.
Yeah.
Look, I thought that the last Enovix earnings call was fine. And Raj said he was excited over 11 times, and we heard that SAT's done, and we heard that they passed safety testing on the initial smartphone OEM quals, and we heard that there's been a lot of interest from military applications looking for batteries for drones, and we heard that they've got a prototype that they're supplying to 2 AR VR companies that could be significant at some point in the future, and we heard a lot of happy talk, but I think there's a lot of nuance there as well, and I think that the nuance is that when Raj says, "Oh, we're working on getting specifications for battery size," well, like, what's involved in that? Is it like a 30-second email to just send the dimensions or the spec? We heard about hoping to provide an update on EV prototypes that are being worked on in Malaysia in 2026. Well, if I recall, we heard that they were going to be shipping prototypes by the end of the year last year. We heard that customers are providing them with input on varying requirements as it relates to either trade-offs with density or charge cycles, or discharge cycles, or fast charging. And I think that's all great. And we saw the stock pop on that. And then the very next day, we see Raj file a Form 4 filing to sell 50% of his vested shares. And look, I don't care who you are or what your opinion is, unless you've sat in that CEO chair. And what I can tell you is that if you've got the opportunity for generational wealth creation, and you believe in everything that you just said about the company's prospects, you don't puke out 50% of your unvested shares. It's a huge red flag. It's a horrible look. And there's just no other way to describe it. And, I don't buy the Raj needed to buy a house story. And guess what? When I was a CEO, I did everything that I could to avoid selling a single share because I believed that the company was going to be a rocket ship, and it ultimately was. If Raj needed money, I'm sure he could have borrowed against his stock. It's just a red flag, and all of the excuses that you hear on Twitter they're just uninformed opinions by people that have no experience in the space. And on the flip side, people were jubilant about the fact that there were some more RSUs issued, and people were speculating, oh, they got them because they got a big order or because the line is sold out. No, that they simply get them because they are still with the company. But I think the really interesting thing is they didn't get RSUs this next tranche. They got PSUs, which are performance related. So there are performance metrics that are associated with those RSUs that you don't get them just by being there, which I think is really a signal that the screws are being tightened in terms of deliverables. So I don't know, man. I mean the nuance of this thing is a huge red flag with the CEO selling. I've heard rumors that there are performance issues as it relates to Zone 1, which is the laser machine. that, are limiting their ability to produce in volume. I don't know if that rumor is true or not, but it's from a, very reliable source. I've heard other rumors that, as the OEMs are providing, their specific requirements, that they're still tweaking the technology and, still trying to, make it work and meet the OEM spec. I don't see how one can own this stock until there's clarity, because as we sit here today, we still have analysts sitting out there with $160 million in revenue for 2026, upwards to $200+ million in revenue for 2026. So on the earnings call, the COO said they could do between 9 to 10 million batteries off of the line, assuming that it was running at 100% utilization. Well, if you use $10 a battery, $12, $13, you sure don't get to 160 million, and you only get there if the line is running at 100% capacity exiting this year. And I don't know. I just don't see it at this point. The AR VR thing is interesting. It's a small nascent market. Maybe it will become a big market, but none of those products have had success yet. I listened to the Q&A, and analysts were asking very simple questions like, how long does it take to stand up a second line? And the answer wasn't, oh, it takes 9 months or it takes, 6 months. It was, oh, we're working with our vendors and they're staging long lead time equipment at their expense. Like, well, why can't you just give a straight answer? And then the last one, which is a huge red flag, not a single analyst asked about it, but I think it's a it's an eyebrow raiser for me. Here we are. It's almost been 3 months since the old CFO left, and there hasn't been a peep about the new CFO.
Mm-hmm.
And I actually spoke to Raj after Farhan left, and his comment was, "Hey, we're going to use this as an opportunity to really upgrade that position with more experienced talent." And I've already received a number of phone calls from people interested in the job. Well, here we are 90 days later, and no one's in that chair. Well, why is it? Is it they're trying to save money? I don't know. Is it that they can't find anybody that's willing to take that job? I don't know. So until that box is checked, it's still a red flag that is, hanging out there and looming over the company. So I think this is one of these things where, if you go back to TJ's special presentation almost 2 years ago, they were supposed to be doing $1 billion in revenue this year. They're going to be lucky to do 160 million in revenue next year. They were at a point where they had 1.5 billion in funnel visibility with 80 OEMs. Well, now we really don't know what the funnel visibility is or what the ramp may look like. And there's also another big missing data point, which I call kind of the if then. What Raj hasn't said is, once we're successful completing qualifications and meeting all the customer requirements, it will result in, an order of this magnitude or participating in these programs. I don't think that they've got any hard commitments that if the qualification is successful, it's going to result in some number of orders. So I wouldn't be surprised to see significant earnings revisions if this rumor about the Zone 1 laser machine turns out to be true. And I suspect that, typically where there's smoke, there's fire. They may actually see their ramp pushed out into the second half of 2026. So this is one that I think we need to watch and pay attention to and just see how the thesis plays out. But make no mistake, when I first got involved with this stock back in 2022, it was a very simple story. We have 30% better energy density. We've got a 5-year lead. We've got a $1.5 billion funnel. We've got insatiable demand. And all we've got to be able to do now is just build it at scale with high yields. Well, now it's become a multi-variable story, meaning it's still not clear that they can build it at scale with high yields. Nobody wanted the EX1. It's not clear to me yet that anybody other than maybe AR, VR, and IoT customers want the EX1M. If this story pivots on the EX2M, it's a 2027 story, and you got a company that's, burning, call it $50 million a quarter. You're going to blow through, your $270 million in cash pretty quickly. So it's very disappointing. And, a lot of the problems with the company, in my opinion, have been, communications errors, unforced errors, 10b5, shelf filings, and just a perpetual, ongoing, repeated tone deafness as it relates to communicating with Wall Street.
And you're a very kind gentleman because I agree with you. I look at it and it's a mess. And I go back to 2024 where, I was using the word after one of his fireside chats of he uses too much word salad. And at that point I was saying, I don't know if it's purposeful. Now I believe it's purposeful. I do. And I'm at the point where I don't have I've got the leaps. I mean, to go to announce that you're going to, you're building the stock up, right? And then at the same point, you next day file to sell. You don't do that. And it speaks to me just a tremendous lack of disrespect for shareholders. I am so angry about it primarily because I look at ENVX and I'm like, my gosh, if the technology worked and blah, I'm at the point now where I'm like, I don't believe anything you say. Nothing you say. Because nothing you've said so far has happened at the time frame and at it just hasn't happened. And I hate to be negative about it, but all you can do is go based on the data. You have to look at the most recent data and whether or not it has a history of come back and uh, do they have a history of executing on the business plan? They don't. And so, no, I feel bad for anybody, and I'm thrilled the fact that Greg, I mean, once again, you save people money. We save people money in NFX. I've got people in Discord don't never pay me a dime who are in there and they're like, you know what? I have saved so much money. Not I've saved so much money because they're an evil company. No, it's not about that. It's just about, hey, what's the probability that this company is going to do everything they say? Um, if you don't mind, I've got a couple questions specifically about, and you mentioned one of them, and one of them is I thought it was a very simple question. He said he wanted to know your opinion. This is my Discord member trading up. He wanted to know, do you think the batteries work?
So I think the answer to that question is nuanced. I think the batteries do work, but do they work in a way that meets smartphone OEM specified requirements? And can they build them at scale? And the fact that they're still tweaking battery chemistry, causes me to have to say, it's still a work in progress, and that question cannot be answered yet. Now, of course, the requirements are different in the IoT and the AR/VR headset market. They're smaller. Enovix has an advantage in the smaller battery size, but even that, you still have to ask yourself, can they make them at scale? And time will tell.
And thank you. And you touched on this. And the question is, why do you think NFX hasn't found a CFO? Before you answer that, I'd like to offer my opinion. I believe it's purposeful. I do. It's not fraudulent. I'm saying I believe it's purposeful that it's not a priority. They are not focused on it because if they were, they would have found one. So I believe it's on purpose. We'll find out why. But sir, why do you believe NFX hasn't been able to find a CFO?
So I think it's either for the reason that you just outlined, or maybe they can't get somebody to take that job. I mean, look, I had filed an S1 to take Brocade public. And a week into the process, my then startup CFO came to me and he said, "Hey, Greg, I just want to give you a heads up. We're going to miss the expense targets." His name was Carl Lee. I said, "Carl, how is it that we didn't have the right controls in place?" And he said, "I just screwed up." I said, "Okay, Carl, you're fired." And I scrambled and I pulled the CFO out of Maxim Semiconductor, who walked away from $10 million in unvested options and took the Brocade job because he thought that he could make $100 million, and he ultimately did. So the fact that they haven't been able to find somebody is either intentional, or a worse scenario is that, once candidates look under the hood and, maybe get a sense as to where they really are, they're just not willing to take the risk. Because really, what is an ENVX right now? It's a $30 million startup with a lot of promise, but the goalposts continue to move, and we've got a CEO selling stock in size. So those are things that just cause me. I think it's a coin toss. I think it could either be, it's just not a priority because they think they've got a solid VP of accounting or finance in there. Certainly doesn't have public company CFO experience, or they can't get somebody. But where I think it's really hurting the company is there's like no news coming out of the place, and the IR function is even less of a priority than it was when Farhan was the CFO. So I just think that people on Twitter that are following this, there was an investment thesis. The investment thesis has changed. If you don't like the fact that I pointed it out, you know what? I don't know what to tell you. What kind of a world do you fucking live in where if somebody offers, some data that might be helpful, that you view it as a personal attack? I don't know what to tell somebody like that.
Well, and I was sitting here thinking while you were commenting on that is, everyone, investors have this desire to always think to the extreme, the positive side, but they'll never allow themselves to think to the extreme negative side. But both are an equal possibility at some point. And looking at ENVX right now, we're going to look back, and it's either going to all make sense or we're going to be surprised. That's where I'm at. Okay, I look at it like, okay, either you have fooled me, who has done it professionally, and I missed it, that there were signs you were going to be successful and I should bet on that, or you're the opposite side. Now, I don't think it's the opposite, fraud. I'm just saying these guys, the longer it takes, and looking at it, what you said, there's no news coming out of the company. Here's the other thing. Not only is there no news coming out of the company, but when you look at their stock, when I hear people on Twitter say, well, I wonder what the market thinks, I'm like, what are you talking about? It was at 16 at the beginning of the year. That's what the market thinks right now. And I really appreciate what you just said, which is the investment thesis has changed because risk has absolutely increased. And if you've listened to our podcast, that's what Greg and our comments have been: risk, risk, risk. I had another question on ENVX, and the question was, do you think you could get us a tour of Raj's new house? Okay, no, that wasn't the question. Here's actually, that was some trade up too. I said, I don't know if I'm going to ask him that. This is from Robbie. Okay, let's just, this question is asked under the assumption that everything's going to turn out okay. Can AI glasses be a huge success for ENVX since there may be the same amount of phones that may produce? Meaning, which one?
Well, look, I think Raj said it the best, which is he thinks that it represents a significant opportunity out in the future. And it's a nascent market. These goggles and glasses have not taken off. Maybe they will. But for the foreseeable future, I think it's a relatively small market. And I think all of the euphoria around it and speculation around it, I think is a little bit premature.
All righty. Thank you, sir. Well, with that, I had a question today that was asked to me, and I had no idea. I looked at the red day, and I looked at Beyond stock, and I went, why the heck is that up 53 cents? And I thought,
I mean, who
I saw no news.
Who the hell knows, right?
I was like, he can't pump. He doesn't have the power to pump it. And he certainly doesn't have the friends to pump it. So I was like, maybe he's pumping it. But my only lead in on Beyond is, I still stand by it's going to be my best short this year because I think it'll be delisted by the end of the year. That's all I'm going to say.
Well, I think it's. I mean, this stock literally wants to make my head explode because we've got a guy in there that self-promotes himself as the fixer, and it's all about the process. And he's got the look and he's got the TV show, and he, successfully rolled up a bunch of mom and pop camping companies. But, where did this start and where is it now? And, this started with a $15 stock that was aggressively pumped and promoted up to $37, in large part based on Lemonis's musings that you were going to have $3 billion lines of business, beyond Overstock and Zulily, that we were going to have influencers, they were going to have, affinity cross-selling. Well, 90 days later, that strategy was abandoned. And then they pivoted to worst in breed partnerships, and they were going to loan some money to Kirkland, and I forget the name of, there were two companies, Kirkland and one other. Well, that company went bankrupt. And then the worst in breed strategy morphed into, it's all about T0 and T0 this and T0 that. Well, this is from the same guy that last year was doing discovery on a Spaces call about T0, and it was clear that he'd never spoken to the T0 CEO goon. And he was actually, there were a couple people that I talked to that he said that T0 was worth nothing or close to nothing. And now it's kind of the linchpin of the strategy, and he's talking about Grain Chain and he's talking about T0. Well, guess what? At the end of the day, he's not running those companies, thank God. So what is Beyond? Is it like a holding company for these two venture assets? And then we have this Spaces that occurred Monday that curiously Lemonis took it down, which I've never seen before. He took the Spaces down, but I was able to listen to the Spaces, and basically he talked about this excitement about using T0 to come up with these Overstock tokens, and the tokens would receive a percentage of revenue, based on hitting milestones, and they would be sold to Beyond shareholders at a discount. And this isn't my first rodeo, and when I really reflected on it, like, what is he doing here? He's trying to use the tokens as a veiled way to raise capital. But if you're a Beyond shareholder and they're funneling some percentage of revenue to those token holders, you're basically missing out on what would otherwise be a dividend. And I've never heard of revenue sharing. Companies get dividends based on profits. So I think it's another strategy du jour, ill-conceived gimmick. And then he talked about how excited he was. They're at an inflection point with, the Overstock business, and they're at $100 million run rate. Well, is that a $100 million run rate for the year, or is that a $100 million run rate for the quarter? And even if it was a $100 million run rate for the quarter in 2023, that company did $1.5 billion in revenue as Overstock. So like, what is there to be giddy about? And I actually tweeted, there's a function on Bloomberg that kind of gives you real-time internet search data, and it hasn't upticked at all for Beyond. It's actually starting to downtick. And if you look at the stock, it's looking down both barrels of what some people think is a tapped out consumer that possibly could result in a recession. The last thing you want to do is own a home furnishings company. So I look at today's share price and I could, really care less one way or the other. Maybe with some short covering, like, who the hell knows? But you've got a company that, is sitting at, $280 million valuation. And you say to yourself, like, what's wrong with this picture? Either nobody believes the CEO because he's done nothing that he said he would do. I happen to fall into that camp. And like, where's the value? Are they getting any value for T0? Are they getting any value for Grain Chain? I don't know, but it's like a public embarrassment. And everybody's making excuses for the guy. It was funny when I saw the Zulily thing. I thought to myself, well, so much for the $3 billion brands. He was talking about that being a massive brand. It was going to be $1 billion. Well, he just sold 75% of it for $5 million. And of course, the bulls say, oh, well, they got their money back. And like, that's some kind of a win. It's crazy.
Well,
I still think this thing could easily be, a $2-3 stock. Maybe it'll be delisted. Who knows? It's just a public embarrassment.
I agree with you. And in my simplified terms, I look at it and I think, it reminds me of being in New York City and they play that, you know, follow the card game. That's what I see going on here. And when we introduce new financial derivatives as a way that you're going to make money instead of a company actually generating profit, hey, guess what? That's a bad idea. Could it be successful? Chances are no. But I'll tell you what, I'm not short the company. Okay. At 448, which is the low, which goes, I mean, the next stop is 253, guys. That's going all the way back to 2012. Okay. It doesn't, at this point, inertia is taking over. And I'm looking at this, I'm like, yeah, this is easy. It's one of my easiest calls to say because exactly what Craig is saying. I mean, beyond all that, then you have the whole issue of where are we going economically? There was a chance at some point, and I said this, hey, look, the stars could line up and get stimulus into the economy, but my gosh, they don't even believe that now. That's the interesting thing. So that's really, to me, I look at it like, oh gosh, man. And once again, I think you mentioned this over, man. You told on a podcast, I think it was over close to 14 or $15. I'm
Yep.
pretty sure. And I've got members who literally, they were so deep in it that if they had held on, Greg, and they made their own decisions, but you provided facts. So I know we're going long, but I wanted to get your quick opinion, sir, on PCT.
Yeah. So PCT is pure cycle technology. I know a number of your listeners have been involved. I started doing some work on it a couple of months ago. And if I go back to my success filter, and again, I'm not a trader. I like to think of myself as a long-term investor, and my personal quest is to, recreate the financial success that I had at Brocade using my success filter. And PCT gets through all the phase gates. That they recycle plastic. They've got a process from P&G that's very novel, and it allows them to take various classes of polypropylene waste, put it through their process, and generate pure high-end pellets that can be used in a number of plastic applications. So it's a huge $60 billion plus TAM. You can argue that they've got a monopoly. There's a ton of white space. They do have pricing power. The CEO said that they think that their first line, and they're supposed to start generating significant revenue beginning in Q1, that their next line may in fact be sold out in the near future. They've got trials with a number of P&G consumer brands. And this is a company that, if they can execute, and this is a 50% gross margin business or higher, you can see a multi-year runway. And they've got another facility that they're standing up in Georgia. There are discussions and funding as it relates to potentially standing up manufacturing facility in Europe. You've got a scenario where people say, "Oh gosh, they're going to need to do a capital raise," but the company has signaled that they think that they're going to actually be able to have local municipalities be able to provide that capital through potentially a bond that would, I think, be a game changer in terms of meeting their capital requirements. So this is a company that checks all of the boxes and has an opportunity to be materially re-rated from where it is today. And it's almost in the same stage of development as EOS, right? They're just on the cusp of starting to hit the beginning of the S curve. So we'll see what happens, but I like it. I own a lot of it. I own a ton of EOS. I've just been observing the BYON fiasco, And I'm certainly not happy that anybody has lost money. I think it's actually tragic what has occurred. And it's funny how the pumpers seem to go quiet, every time that the stock sells off. And I often wonder, if they're financially benefiting from one in one way. But I think Pure Cycle is about as exciting as it gets, and we'll have to see what happens. It's an execution story, just like EOS is an execution story.
Would you say though, one of the rubs that I've talked about at Pure Cycle is it's just a boring technology? Would
Well,
you say
sometimes
that? Would
there's,
you say, oh, you're being short-sighted?
I think it's sometimes boring businesses and boring technology can be some of the best investments because it could be a turn the crank business with unlimited runway, some massive demand. I mean, look, irrespective of where you come down on the whole, green recycling front, there's a serious waste problem. And
Yeah.
this company provides a competitive solution to take that plastic waste and generate, high-end polypropylene pellets that will allow, basically the producers of these plastic goods to recycle their products. So I think it may not be sexy and it may not have a lot of pizzazz, but I think there's something very positive about that.
All right. Well, I don't have a position yet because I'm waiting for a break level. And while we were talking, just so you know, our president said that the auto tariffs of 25% will be permanent for the rest of his term. So we'll see how the market likes that. Final question, if you don't mind, sir. I had a member because I decided, this is the only time they're going to be able to talk to somebody of your caliber. And first of all, be able to ask a question, but also to get a real answer. So, let's see. Oh, Robbie did want to say, let him know we really appreciate and value his time and expertise and to ignore any negativity from the stupid people. Well, that's pretty darn good. I like that. Okay, so the question is, one second here. And this also comes from Trading Up. His question is philosophical, perhaps. If you had to do it all over again, Greg, and you had personally, what sectors or technology would you say, yeah, I'm going to invest in those? What has been
Well,
surprising to you?
well, I think that's a great question, and I'm always in the hunt, looking for companies that can get through my success filter and check all those boxes because if they can, it implies that you've got an opportunity to see a company emerge as, an industry leading gorilla.
Mhm.
So, I mean, look, if I had to do it over again, I would do it exactly the way that I did it. Um, and the success filter that I'm talking about, and I'm vetting EOS against and ENVX against and Pure Cycle against, is the exact same success filter that I used to find and vet Brocade. And then 27 interviews later, I got the job, and the company went from a small private company with less than 100 employees and 3 million in revenue, in a 250 million-dollar private market cap to 3 years later was the industry gorilla and had a $24 billion market cap. And what it really was is it was pretty clear back in the day that there would be a huge market opportunity for being able to scale servers and storage, and Brocade had the only technology that was viable to pull that off. And there were lots of naysayers at the time, but I could see it, and I wasn't going to be denied. And ultimately, I got that job. And I'm using that exact same success filter today. I'm looking at various AI companies. Unfortunately, most of them, obviously, the ship has left as it relates to NVIDIA, but there's a whole ecosystem of emerging AI companies that I'm looking at. And I'm always interested in, I've only got so much time to do the kind of research that I like to do to really understand the market and the technology and the team and the competitive landscape and the unit economics. But, opportunities are going to be emerging. They're going to be emerging in the AI space. They definitely exist in the energy space, the battery space. Um, so I think the key is, be like a linebacker, be on the balls of your feet with your knees bent, ready to go to the ball, And as you start to come across opportunities, don't listen to some knucklehead on Twitter that is promoting, themselves as being some kind of an interesting, some kind of an industry expert or investment wizard. Because I can guarantee you, at the end of the day, um, if you're that successful, you're probably not, trying to build a coalition on Twitter talking about how great you are. So in any event, that's kind of my thinking about that question.
You've offered in the past, and I know we've been busy, but would you have offered to share that to some degree, your success filter, at least the broad concepts on that? Would that be something you'd be willing to do again?
Yeah, I think maybe we should do a podcast
Okay.
just focused on that because it's so funny. Like some people have said, oh, who is Reyes? He's not a good investor. He doesn't know what he's doing. It's like, you know what? I actually have done pretty well for myself, and I use that filter to basically create $1 billion in personal wealth, and that's the filter that I'm using to look at and assess companies. I'm not. Really interested, quite frankly, in, opinions of people that have no basis for them. I'm always interested in, trying to get to ground truth, and I'm always applying it to my thesis and my success filter. And, like I said, new data became known to me about ENVX. The thesis changed, and we went from a one variable story to a very complicated story with lots of moving parts. And, here we are 3 years later with the stock actually below where it was when TJ Rogers did its special presentation.
Yeah, and I would say anybody who says that, it's just ridiculous because most of the people on Twitter I found don't actually risk capital. I've figured that out. You can sort of watch, and he's like, "There's no way you're risking that much capital," And so there are some very intelligent researchers on Twitter, but at the end of the day, and life's unfair. But at the end of the day, Mr. Rees, it's a once in a lifetime to be able to ask him questions, and I'm a rare breed because I 30 years in the business successfully, and so and what's interesting, Greg, is our comments as I look back have been about protecting capital. It hasn't been about, oh, this company's the devil or this. It's just been about, hey, these are what the risks are, right? These are what the risks are, and so I would love to do that. We'll line that up off air. I wanted to thank uh, Greg, Mr. Rees, for doing this. Again, I cannot stress to the listeners, this is a big deal, people, right? And again, send me questions. I have a new, podcast at MrNotAdvice.com. You can find me at MrNotAdvice. And with that, I am on Twitter and, of course, my Discord. But with that, Greg, final comments, please tell them how to reach out to you and take us home.
Yeah, well, thanks for having me, and I appreciate the seriousness with which you approach the podcast and the thoughtful discussion and line of questioning. And I only do these periodically because it takes a good 8 hours to prepare for these, to get my thoughts collected, and listening to the earnings transcripts, reading them multiple times, listening to the earnings call, collecting my thoughts. So I put a lot of effort into it to try to bring some value to the dialogue. And I hope everybody, you know, is convicted about their investments. They've got an investment thesis. They know, why they've invested, and that they have the ability to be open to additional inputs that might inform their investment thesis positively or negatively. So I'm happy to do it. And if people have an interest in communicating with me, they can DM me. And I've had people do that, and I'll take my time and try to answer their questions thoughtfully. And again, I'm not giving investment advice in any shape or form. I'm sharing what I'm doing and why I'm doing it. And there's no guarantee that I'm right or going to be successful, because there are lots of variables that are outside of the companies that I'm involved with, their control. But I think that this is a thoughtful way to approach thinking about companies beyond listening to somebody promoting themselves as an investment expert on Twitter, or people that don't have the kind of experience that you do or I do, to actually have an informed opinion, a thoughtful opinion that people can benefit from.
Yeah, I agree, and I love doing these, and I've got to tell you, my members are spoiled because I'll message Greg and ask him questions. So I want to encourage you, Greg. How can we follow you? How can they find you on Twitter, sir?
Yeah, my Twitter handle is at Jossie Reyes 209. So it's
Okay.
JOCEYREYES 209.
Awesome. And send me the email if you have questions. And guys, if you have companies, and ladies, if you have companies you'd like myself or Mr. Reyes to look at, please email them. You can find me on Twitter, send them to Greg. Okay. We'll do a cursory examination, and then Greg will make the decision whether he wants to do a deep dive. I'll look at it technically. We'll actually look at them. So thank you so much, sir, for taking this time. And I will look forward to having you on again, sir.
Yeah, my pleasure. Thanks so much for having me.
You ain't holding your breath, man, cause I'm out here, I'm hungry. I don't play around, trust me. Ain't had as much drive since my Honda Civic got rusty, and my girl said that she loved me. It's funny, just thinking back, study hard for that 9 to 5, like I thought it actually be good, but that it was dreaming, still dreaming. Spotlight on me like Willie Beeman, still performing like Al Pacino. Instagram and tuxedos with my peoples. We growing up, still don't seem like we slowing up. 10 squad, we throwing up every time that we showing up. Get it while I'm living. All I ever hear's the clock tick, tick, ticking. So I'm about my business and I'm running with it now. They don't wanna give it up, we gon' make it out. Get it while I'm living. All I ever hear's the clock tick, tick, ticking. So I'm about my business and I'm running with it now. They don't wanna give it up, we gon' make it out. It don't get no greater, feel like I'm on fire. Feel like I'm Johnny Storm, feel like I'm volatile, explosive. Get close enough, you'll notice your girl act out of character when she see me approaching. Ain't poaching, I'm just saying, it's nothing. You punching above your weight, I'm something. She ain't seen no substitute in the 18. That's BA, Baracus, that BS, that whackness. Get no play in my axis, make them jump like AJ Hackett. Guarantee you, in these boots, they couldn't walk 1 mile. Really need to go and hang it up like a drunk doll. So behind the times, they should probably rock a sundial. Shattering their dreams, I can make big puns small. Music from the soul, don't need them to help me. If they fiending for the flash, they should take another selfie. Said I'm running like Mo Farah, so dapper. Swear the whole world could go against me, it don't matter, man. Get it while I'm living. All I ever hear's the clock tick, tick, ticking. So I'm about my business and I'm running with it now. They don't wanna give it up, we gon' make it out.